Good evening. So now coming to the explanation for integrated accounting. What is this integrated accounting? It combines the cost accounting and financial accounting records together under one set of books. That is called as integrated accounting system. Accounting system are of two types. One is the integrated accounting system. The other is non-integrated accounting system. Under non-integrated accounting system, the costing books and financial books are maintained separately. For the same period, you will have two different profits. One as per costing books and one as per financial books. Why are there two different profits for the same accounting period? Because of certain disagreements. Items of pure financial nature, you do not include it in items of pure financial nature, you do not include it in cost books like bank charges, transfer fees, interest on investments, dividend received, income tax. These are items which are excluded from cost sheet. Then when you end up in difference in valuation of stock, because in financial accounting, stock is valued at cost or net realizable value, whichever is less. Under cost accounting, stock is valued only at cost. Then you may have under absorption and over absorption of overheads in cost accounting, because in in cost accounting, the overheads are absorbed at predetermined rates. But in case of financial accounting, the expenses are recorded at actuals. So you may end up with over absorption and under absorption of overheads. These are the possible reasons for difference in profit between cost accounts and financial accounts. That is why came up the concept called as integrated accounting, which combines the records, which combines the financial accounting and cost accounting records together, and you have a scheme of journal entries for integrated accounting. Let me explain those scheme of journal entries from your study material itself. This is your study material where you have the various transactions given, and for these various transactions you have close to 24 journal entries. Let me explain them one by one. Okay, so what happens in case of integrated accounting is it combines the journal entries as per financial accounts and as per cost accounts. So how do you remember those scheme of journal entries? Financial accounts journal entries are all basics. You know these journal entries, which are very simple. It is 11th standard journal entries to be very precise. Okay, so and the journal entries financial accounts journal entries, the same which how you will deal with in cost accounts and how you will deal it with integrated accounts. Before proceeding to explaining the journal entries, let me explain the shortcut. So how do you remember those journal entries? Under integrated accounting, the journal entries are recorded as, just a minute, under integrated accounting, the journal entries are recorded as take the debit from cost accounts and the credit from financial accounts. You will consider the debit from cost accounts and credit from financial accounts. Then the items of financial nature like cash, debtors, creditors, etc. Cash, debtors, creditors, etc. will be posted as to general ledger adjustment, account or cost ledger control account. Okay, so whenever you have financial transactions in costing books, this entry is in costing books. In costing books, the items of pure financial nature, let me mark that also, in costing books, items of pure financial nature will be reflected this way. Under integrated accounting, the journal entry will be posted as take the debit from cost accounts and the credit from financial accounts. And in costing books, every entry in costing books, every entry will have a suffix of control account, because you aim at controlling the cost. So it will be raw material control account, wages control account, WIP control account, and so on. Okay, then in case of integrated accounting, I told you, in case of integrated accounting, the journal entry posted will be take the debit from cost accounts and the credit from financial accounts. Take debit from cost accounts and the credit from financial accounts. But there is an exception to this rule. There is an exception where you will take the debit from financial accounts and credit from cost accounts, where you will take the debit from financial accounts and the credit from cost accounts. So when will this exception apply? This will apply in case of return and for sale entry. In case of return of goods and in case of sale entry under integrated accounting, you will not take debit from cost and credit from financial. Instead, you will take debit from financial and credit from cost. Okay. So now let me explain those scheme of journal entries. Please take your study material, page number 278. So let me explain them one after the other. Credit purchase of raw material. How do you post the entry in financial accounts? In financial accounts, you will post the entry as purchase account debit to creditors. In cost accounts, what are you going to purchase? Raw material. So the entry will be material control account debit to creditors. Creditors is an item of financial nature, which in cost accounting, you will post it as to general ledger adjustment or you will post it as to cost ledger control. Both means the same. So it is material control to general ledger adjustment. Under integrated accounting, take the debit from cost accounts and the credit from financial accounts. So entry will be material control account debit to creditors. Okay. Cash purchase of raw material, purchases to cash. In case of cost accounts, what are you going to purchase? Raw material. So it is material control account debit to general ledger adjustment. In integrated accounts, take the debit from cost and credit from financial. So it is material control to cash. Then purchase of special material for direct use in the job. So what happens in financial accounting is they do not analyze for what you are purchasing the raw material, whether you are going to stock it up or whether you are going to use it for a job or what and all. You are going to keep it in stock. Such analysis doesn't happen in financial accounts. Once you incur an expenditure, they record an expenditure. That's all. They do not get into deeper analysis of why such cost is incurred. Okay. So when purchase of special material for use in job, it is simply purchases to cash if it is cash purchase or creditors if it is credit purchase. But in cost accounts, you are purchasing the raw material for using it in the job. You are not going to keep it as a raw material stock. So the entry will be WIP control to general ledger adjustment. Okay. So you are not going to stock it as a stock of raw material. Instead, you are going to directly use it in the job. So the entry will be WIP control to general ledger adjustment. In integrated accounting, the debit from cost and the credit from financial. Please make a change in your this thing. This is not material control. It is instead WIP control to cash or creditors. That will be the entry as per integrated accounting. Okay. So here in the third entry, it is not material control. It is WIP control. Okay. Then purchase of material for repairs. As I already told you, once when a raw material is purchased, under financial accounts, they don't make an analysis onto why such expenditure is incurred. So simply purchase of material, purchases to cash or creditors. For repairs. Repairs is an indirect activity. So it goes to factory overhead control account debit to general ledger adjustment. So when it comes to integrated accounting, factory overhead control account debit to cash or creditors, which is the debit from cost accounts and the credit from financial accounts. Okay. Then return to supplier. When you purchase, it is purchases to creditors. When you return, it is creditors to purchase. When you purchased, it was material control to general ledger adjustment. When you return, it is general ledger adjustment to material control. So I told you the rule of debit from costing and credit from financial will not apply for a return entry. So see here, it will be the debit from financial and the credit from costing. Why is it so? It is because when you purchase, what happens in integrated accounting? It is material control to creditors. So when you return, it is creditors to material control. The inverse of purchase entry will be the purchase return entry. So in case of purchase returns, it will not be the debit from costing and credit from financial. Instead, it will be the inverse. Okay. Then payment to creditors. It is creditors to cash. Both the debit and the credit are items of financial nature, which will not appear in cost accounts. So in integrated account, you will have the same entry, which is represented again in integrated accounting. There is no entry in cost accounts because both creditors and cash, both are of financial nature. Then once when you purchase raw material, you do not analyze it further in financial accounts as to whether it is direct material, indirect material, and whatnot. Okay. Such analysis you do not take further under financial accounting. Now, issue of direct material to production shop. So once when you issue raw material, what will happen? The raw material becomes WIP. All those are real accounts. So debit where it goes in, credit where it goes out. So the entry will be WIP control to material control. The goods move into WIP from raw material. Debit where it goes in, credit where it goes out. So WIP control account debit to material control. Since no entry is in financial accounts, you will have the same entry under integrated accounting also. Then issue of indirect material. Indirect material to production shop. What is indirect material? It is factory overheads. So entry will be factory overhead control to material control. Debit where it goes in, credit where it goes out. So it is factory overhead control to material control. The same entry will repeat under integrated accounting. Then the return of direct material to store. When you issued material to production, the entry was WIP to material control. When it is returned, material control to WIP control. The entry will reverse. Return of indirect material to store. Please make a correction in point number 10. It is return of indirect material to store. So when you issued indirect material to store, the entry was overhead control to material control. When that indirect material is returned, it will be material control to overhead control. The inverse of the issue entry will be the return entry. Then material transferred from one job to another, no entry is passed in any of the books. Then adjustment of depreciation in stock value. So in case if there is any natural loss in the value of stock, you regard it as factory overheads. So factory overhead control account debit to material control. Why are you crediting material control? Because there is loss in stock. Material has a debit balance. For a debit balance, when there is loss in stock, you credit the material account. So it is overhead control account debit to material control account. And the same entry will be posted in integrated accounting also. So this entry is for depreciation in stock. When there is surplus in stock, I have told you about abnormal gain and all in case of process costing. So when there is surplus stock, what will happen? It will be material control to factory overhead control. So the same entry will repeat under integrated accounting also. Then payment of wages. So analysis of material cost is over. Direct material, indirect material issued for production, returned, depreciation, then surplus, all that is recorded. Now coming to the next transaction, which is wages. When wages are paid, entry in financial books will be wages to cash. In cost accounts, it is wages control account debit to general ledger adjustment, or if you want, you can write it as cost ledger control account. Under integrated accounting, the debit from cost and credit from financial. So here it is not factory overhead control. There are too many printing mistakes in your study material. Here under point number 14, under integrated accounting, it is not factory overhead control. It is wages control to cash or bank. It is the debit from cost accounts and the credit from financial accounts. Then for analysis of distribution of wages, you do not further analyze to whom you are paying wages under financial accounting. Under cost accounting, when it is direct wages, they are directly engaged in production. So it will be WIP control account debit. WIP control is debited for direct wages. Then wages paid to factory staff will be factory overhead control account debit. Administration overhead control account debit. Selling and distribution overhead control account debit to wages control account, where you are analyzing the wages paid into direct wages, indirect wages applicable to factory overheads, administration overheads, selling and distribution overheads. The same entry will repeat under integrated accounting also. Then for payment of expenses. These expenses, once paid in financial accounting, you treat them as expenses to cash. Under cost accounts, you will analyze those expenses into factory overheads, administration overheads, selling and distribution overheads to general ledger adjustment. So under integrated accounting, it will be the debit from cost accounts and the credit from financial accounts. For depreciation of an asset, under financial accounting, it is depreciation account debit to asset. Under cost accounts, you analyze onto depreciation of factory-based asset, office-based asset, or distribution-based asset. So it is factory overhead control, administration overhead control, selling and distribution overhead control to general ledger adjustment. So under integrated accounting, the debit from costing and the credit from financial. Then after this, the further analysis of absorption of overheads does not take place in financial accounts. So absorption of factory overheads, no entry. Where do you absorb factory overheads? In the production phase. So it will be WIP control to factory overhead control. Spoiled or defective work. Once when a work is spoiled, you have to debit it as abnormal loss in P&L account, correct? So it is costing P&L account debit to WIP control. Recording of cost of jobs completed. So from WIP, it is moving to finished goods. So the entry will be debit where it goes in, credit where it goes out. So finished goods control account debit to WIP control account. Recording of cost of goods sold. So from finished goods stock, it is moving to cost of sales. So it is debit where it goes in, credit where it goes out. So cost of sales account debit to finished goods control account. The same entry will repeat under integrated accounting. So recording of sales. Under recording of sales, when it is cash sales, it is cash to sales. When it is credit sales, it is debtors to sales. In case of cost accounting, it is general ledger adjustment account debit to costing P&L. I remember I told you, in case of returns and only in case of sales, you will not have the rule of debit from costing and credit from financial. Instead, it will be the inverse. So you take the debit from financial and the credit from costing. So here it is not to P&L, it is to costing P&L. Then for absorption of administration overheads, do you remember the cost sheet format? Factory overheads is absorbed at WIP stage. Administration overheads is absorbed at finished goods stage. Selling and distribution overheads is absorbed at cost of goods sold. Okay, so absorption of administration overheads will be finished goods control account debit to administration overhead control. Selling overheads will be cost of sales to selling and distribution overhead control. So a detailed analysis on to why the cost is incurred, where it is absorbed, and all such analysis happens only in cost accounting books. So these are the possible reasons for difference in profits in case of integrated accounting and non-integrated accounting. Under integrated accounting, you combine both books. That is why you have one set of profits. Under non-integrated accounting, you will have no entry in financial books, but an entry in costing books. So you will end up with mismatch of profits. That is why you have to reconcile the profits. Okay, va? So these are the scheme of journal entries. It is very, very easy to remember the journal entries if you understand the sequence of it. Take the debit from costing and the credit from financial, except in case of returns and sales. Then analysis will be debit where it goes in, credit where it goes out. And for every entry, you will have control account in costing. And in costing books, if you are to post an entry, items of financial nature like cash, debtors, creditors, assets, all that, it will be posted to general ledger adjustment account. In some books, they show it as cost ledger control account. Both means the same. Okay. Now coming to, there are still two more entries, 25 and 26. This you know. I have already taught this in overhead chapter. When there is under absorption of overheads, it is costing P&L to overhead control. When there is over absorption of overheads, it is overhead control to costing P&L. So this you know. Okay. Now coming to sums. They are asking us to journalize the transactions, assuming cost and financial accounts are integrated. So you have to follow integrated accounting system. Let me not get into the solution. I will just explain by the entries itself. Raw material purchased. What will be the entry? Visualize. Financial accounts purchases to cash. Cost accounts, material control to general ledger adjustment. Integrated accounts, debit from costing, credit from financial. So it is material control to cash or creditors. Material issued to production. So WIP control to raw material control. Wages paid. So wages control to cash will be wages paid. Then they have told 30% is indirect, which means the remaining 70% is direct. So it will be WIP control, then factory overhead control to wages control. Okay. So they have just shown factory overhead control to wages control, WIP control to wages control. They have shown it as two different entries. You can also show it as a compound journal entry. WIP control for direct wages, factory overhead control for indirect wages to wages control account. Then after this, manufacturing expenses incurred. Manufacturing expenses incurred will be factory overhead control to cash, debit from costing, credit from financial. Manufacturing overheads charged to production. So it will be WIP control to factory overhead control. Selling and distribution cost. So selling and distribution overhead control to cash. How will you absorb this selling and distribution overheads? Cost of sales to selling and distribution overhead control account. Then after this, finished product at cost. So the goods are completed now. So it is finished goods control to WIP control. Then for the sales. For the sales, it is debtors to costing P&L. Okay. Then for closing stock of goods. For closing stock, it is nil. Received from debtors. So cash account debit to debtors. Paid to creditors. Creditors to cash. These are items of pure financial nature which will not appear in cost accounts but will appear under integrated accounting. Okay, wow. That's all with this sum. You might be asked a sum in case of integrated accounting where they may ask you to post the journal entries. Okay. So coming to illustration 13. Pass the journal entries for the following transactions in double entry cost accounting system. So here they are not asking you for the journal entry as per integrated accounting. Instead, they are asking you journal entries as per double entry cost accounting system. Okay. So issue of material, direct material and indirect material. When you are issuing, direct material will be WIP control. Indirect material will be factory overhead control. WIP control, factory overhead control to material control. Allocation of wages. Direct wages will be WIP control. Indirect wages will be factory overhead control. So WIP control, factory overhead control to wages control. Overheads absorbed in job. Where will you absorb factory overheads? In WIP control. So WIP control to factory overhead control. Administration overheads will be absorbed at finished goods stage. So it is finished goods control to administration overhead control. Selling and distribution overheads you will absorb at cost of sales. So it is cost of sales to selling and distribution overhead control. Then coming to over absorption of overheads. It is factory overheads over absorbed. So it is factory overhead control account debit to costing P&L. When the